The Federal Reserve has surprised markets with a 50 basis point cut. I'm here with Jeffrey Christian, Managing Director at CPM Group, to talk about what this means for markets. What does this mean?
Well, you know, the Fed and other monetary authorities have been saying for more than a week that they would do whatever they could to stanch the bleeding in the economy due to the coronavirus interrupting the global supply chain across industries. So it's not really a surprise, and I would say that a lot of the 1,300 point increase in the Dow Jones on Monday reflected anticipation in the markets that the Fed would make this announcement today. And the Fed, lived up to the expectations of the market because partly, I guess, it had to. We've seen gold and silver prices rise sharply, but they're within the band of what we've seen over the last week or 5 trading days. And we think that that's probably like a one-time spike and that we'll see prices continue within those bands for a while.
Well, do you see, maybe not the Fed, but do you see more fiscal spending because of the virus? Is that going to be good for gold?
Well, that's not clear right now. Monetary policy can keep us out of a depression or it can reduce the size of a recession, but it really can't turn the economy around. It's really going to take fiscal policies by the governments of the world, and we really haven't seen any discussion about that. In the United States and to some extent in parts of Europe, you have extremely divided, dysfunctional governments that will find it very hard to make any fiscal responses. In addition to which, the coronavirus is still unknown. So making a fiscal policies today to deal with it that may not come into effect for 6 or 8 months may be meaningless because the coronavirus may well be controlled one way or another within the next 2 or 3 months.
So is a 50 basis point cut panic? Could that be the message that the Fed unintentionally sends, is that this is a panic move?
I don't think they'll send a message that it's a panic. I think they'll send a message that, like the CDC, unlike the White House, they are taking the coronavirus and its economic impacts seriously. And they'll do what they can and need to do within their realm to protect the global economy from it. I don't think it'll be seen as a panic. I think it'll be seen as a realistic reaction.
Okay. So what do you think we can expect from here on out?
Well, the markets will continue to be volatile over the next few weeks as everybody tries to come to terms as to what the coronavirus really means. Our expectation is that by April or May, this will be under control. So we've got another month of volatile financial markets. But by April or May, one or two or both things will probably change. One is viruses tend to go dormant as the temperatures in the northern hemisphere warms up. So the coronavirus may cease to be as problematic by April or May. In addition to that, you have a lot of research going into antidotes and medicines, and that may kick in April or May because it's going very quickly. So you may have the coronavirus in and of itself being less of an issue, but regardless of whether that happens, governments and corporations around the world will have come up with policies and procedures to work around it. So we think that you've got several weeks of volatility here, but that, next month or the month after that, you'll probably see things under much more stable control.
Excellent. Thank you very much for your insights in this surprising, after this surprising event.